Hello, Hamish here from mortgagesonline.co.nz. Monetary policy statement out by the Reserve Bank as they hold the OCR. I'm going to get into some of the actual little bits and pieces, little nuggets in that report, which might give us some clues around their thinking in terms of interest rates and house prices. So when it comes to interest rates, their big focus has always been obviously CPI or inflation, right? Midpoint of 2% is their target. Now it's already north of 3%. Okay, so that's basically the blue line here. So there is some pressure on them, and without this lockdown, could we have seen an increase in interest rates? They are alluding to basically, in some ways, they are alluding to upwards track of the OCR. That's not a surprise. Surprisingly, though, wage inflation this time around, from historical trends, has actually stepped up quite quickly. Employers obviously are struggling to find people in most industries, is what we hear anecdotally. So if we look at actual interest rates that's being offered by the banks in terms of fixed rates, we actually started to see some of the pressure on the longer term rates actually many months ago. Right, and they've been creeping up ever so slightly. The shorter term ones have kind of jumped up lately. Look, overall though, these rates still fairly low when we track it back to early 2019. A lot has changed since then, but obviously, still opportunities there for the longer term rates to still fix well below historically what we've seen in New Zealand. If we go a little bit deeper, obviously the Reserve Bank also are keeping an eye on maximum sustainable employment. But if we look at the unemployment rate, what we see is that certain places, this orange line is the latest one, this March, the blue one is from last year. Places like Auckland, Waikato, Hawke's Bay, actually seeing a decrease in unemployment, but there are other areas which have actually seen an increase, and perhaps that's due to tourism, most likely. But, it's not, I guess, wage inflation and things like that aren't always, it's not across tourism, I guess, and related industries. If we actually look at the monetary policy statement itself, and this is available for anyone to download as well from the Reserve Bank website, when we start to think about actual house prices, some of the actual things that have placed pressure on that, such as migration, down. Things that relieve pressure on house prices, supply or building consents, up. So when we look at that, you kind of would expect that maybe you can understand why the Reserve Bank's thinking is around price inflation moderating. Interestingly, when we look at this building consent issuance compared to 5 years ago, looks like a lot of pressure down around Christchurch, a lot of building happening there, and Waikato as well, apart from Auckland, which we kind of see around us as well if you live in Auckland, that is. So due to that house price inflation from the Reserve Bank, their thinking is that it's going to go up a bit and then actually start to dip. Whether that actually happens like that, I mean, it's anyone's guess really. But looks like there are some things on the horizon which might have pressure the other way. Obviously, there is other things around the toolkits that the Reserve Bank is going to deploy, like debt-to-income ratios and deposit levels changing. And I've done a clip about that on a different thing that you should find on the website. Look, hopefully that has kind of been insightful or at least entertaining if you're kind of into that kind of thing, I guess. But thanks for watching.